Hi, this is Jeanette McIntosh of Berkshire Hathaway Home Services Florida Realty, here to talk about credit scores. It is an important part of getting a loan when one is buying a house. So what is it? How is it calculated? What should I do to get a credit score? Can I improve it? When we borrow money from a friend or family, we get an undocumented credit score from them. It's not a number, but more like, yes, I would lend to them again, or it can go all the way to as bad as, I will never lend to them again. It depends on whether you paid them back or not, whether you paid within the time you said you would pay them, and if you didn't, how long did it take them to get that payment from you? As you may conclude, if you paid them back within the time frame you had promised, your friends are more than likely to lend to you again. If you made excuses and kept making promises that didn't pan out, well, the longer it took to get the money back affects how willing they may be to lend to you again. As adults, we tend to borrow from different places: financial institutions, credit card companies, utilities, the car dealership, when we buy a house. You get the idea. There needed to be a way that all these businesses could get an idea of how well they could depend on you to be financially responsible, even though they may have never heard of you before or done business with you. There needed to be a snapshot of your financial situation. The credit score was born. There are 6 reporting companies that compile our credit data from all the other companies that we borrow from. You may have heard of the top 3: Experian, Equifax, and TransUnion. They keep a record of our credit history and assign a number to it. One would think that one score would be the same on each of them, but in reality that is not usually the case, since every lender or creditor doesn't report to all 3 of the companies, which will affect your score. Those 3 companies mostly use what we call the FICO score. There's now also a Vantage score, which was created together by Experian, Equifax, and TransUnion back in 2006. Their latest revision now uses the range of 300 to 850, just like the FICO score. What's nice about the Vantage score is that a person can get a credit score within 1 or 2 months of opening up a credit with a company. With the FICO score, it usually takes 6 months. Also, Vantage score doesn't account for the paid and unpaid medical bills. So how does one establish credit? You can become an authorized user. Your parents or an older sibling, even a spouse, would be ultimately responsible for the credit card bills, but they will put you on their account as an authorized user. If the credit card company has reported you as an authorized user, you can then benefit from someone else's good credit. However, if they become late on their bills, then your credit score is going to be impacted as well as that person. You can also get a cosigner. With this one, the card is in your name, but someone cosigns, basically saying that if you don't pay the bill, they will be ultimately responsible. If you miss payments, your credit score will be impacted. Unfortunately, it will also affect the cosigner's credit. Some credit card companies may not allow for cosigners, but one can get other bills using a cosigner. Okay, so now you have established your credit. You have your first number. Probably it's not going to be very high because this is just the start of your credit history. You still have to prove yourself consistent and reliable. FICO and Vantage score have different things that they consider more important than the other. So let's look first at the FICO score. What is most important to them is your payment history. That makes up 35% of your total score. This includes your history with credit cards, store cards, installment loans, like when you get a car, mortgage loans, and finance companies. The length of time you may have been overdue on your payments is looked at, as well as the number of past dues you have. They also look at the number of counts that are being paid on as per the contract. Bankruptcies, lawsuits, if your wages have been attached, which means someone's grabbing it before you can get it, is a mark against you. Those small amounts, and if it was done many years ago, it counts less. 30% of your score is based on the amounts you owe. It's not as simple as how much do you owe. They look at how many of your accounts have balances. If you have lots of different credit cards, let's say, and they all have a balance, it might be an indication that you're getting overextended and may not be able to pay your bills. But they also look at what the balance is on each card compared to how much available credit you can use. So if you use all your credit cards, but they all have small balances compared to what you could use, then it may not affect your score that much. FICO score looks at the length of your credit history. They look at the age of your oldest account and the age of your newest account, and then takes the average of all of your accounts. Don't open up new accounts during a short span of time because that will affect adversely the average age of all your accounts. Last, FICO also looks at the types of credit you use. You get better score for having different kinds of credit, not just credit cards. Sometimes you might want to get a personal installment loan. That may work better for you than using a credit card. The Vantage Score model also looks at your credit score, but a little bit differently than FICO. They put a major emphasis on payment history, utilization, and depth of credit. For FICO, these three components make up 65% of the score, but for Vantage Score, it makes up 81% of the total score. That's your payment history, the percentage of credit being used compared to how much you can use, and the age and type of your accounts. Then there's the balances on your loans, which only affects your score about 11%. The rest of the score is influenced by the amount of available credit you have and how much new credit you've gotten recently. You can maintain good credit by paying your bills on time, and don't open a lot of new accounts in a short amount of time. If you're going to be late on a bill, call the lender, explain to them your situation, and see if you can work something out. Check your credit score frequently, monthly will do, and check it for errors. Contact a company if you find a mistake. Last, what do you do if you have missed payments? Do what you need to do to get current and then stay current. The longer you pay your bills on time, the better your score will be, as the impact of the missed payment on your score fades away. My last piece of advice is check your credit score monthly. Many of the banks offer this benefit online. You can also get it for free at myfico.com and at vantagescore.com. I hope you found this helpful. Please press the like button if you did. I'd love for you to subscribe to my channel where I explain the real estate journey to you, plus tell you about our lovely Lake County in Central Florida. In closing, this is Jeanette McIntosh, Berkshire Hathaway Home Services, Florida Realty, wishing that all your real estate dreams come true. Thank you for listening.